What's going on, guys? It's Jonathan Smith. I want to bring you another market update today, and I'm going to tell you what is the market doing and why it is not crashing. So stick around to the end. You're going to love all the information that we have here. So right now, the average days on market, which is the time between putting the for sale sign in the yard and being sold, is only 78 days. Now, 2 weeks ago, it was 76 days, so almost not changed at all. We're seeing the market totally stabilize and get back to a normal market. All right, so the market over the last 2 years was more like an auction market, meaning you'd put the sign up and you'd have 20 or 30 people writing an offer on it. And so you saw the prices increasing rapidly. And so the neighbor would hear about it and they'd want to list their house 20 or 30,000 more because of all the activity on the last one. And they'd be able to get that price because, again, you'd have now 19 people looking at the house. And so that's what the market for the last 2 years has been. This year, it's more of a normal market. We're back to 2018, 2019. 78 days on market is still a seller's market. It's not a buyer's market. Right now, the market favors sellers. The sellers get to call the shots still. At 78 days on the market, it's a seller's market. That means buyers are not favored right now. The buyer doesn't get to call the shots and make a really lowball aggressive offer and expect to, make the deal happen anywhere near what they're offering or even get a counter back at all. You need to know that it's still a seller's market, so you need to analyze what the recent sales have been and base your offer based on what the sales are and what they were. Here's an important thing to note. I wrote down 42% of all active listings right now have had to reduce their price. That means that 42% of people overshot what they thought their house was worth trying to get into that same auction environment that doesn't exist anymore. So you need to be cognizant when you're pricing your home, you need to price it at the most recent comparable sales and not an arbitrary number that you pick out of the sky. It's very important. You have to price your home to sell, not to make the most money because you think you're going to get 30 or 40,000 more than the last sale. This is very important, something you need to know. It is not 2008. Okay, the market has slowed a little bit, but it is a normal market right now. But why is it not 2008? Well, very importantly, we're not having the 0% down, no credit, no income verification, no money in your bank. We're not having those loans anymore. The underwriting guidelines are really tight still. Your credit requirements are high. People are putting big down payments. They're paying cash. They have 780 credit scores, okay? We're not seeing the adjustable rate mortgages at the levels we were. And the adjustable rate mortgages we have now are much more confined on how much they can increase in rate. They have limits. So you're not going from 4 to 8% overnight. We don't have negative amortization, meaning every time you make your payment, you're not even paying off your interest and the balance is going up. That doesn't exist anymore. We don't have the balloon payments where in 2 or 3 years you have to pay off the property in full or refinance it. None of those programs are existing right now or exist in the same way that they were back in '08, which means we're not having a ton of people going into delinquency not knowing how they're going to be able to get out of the mess that they're in. So we're not going to have this huge foreclosure wave that some of these, CNN or whatever is writing about. It's very important. This is not 2008. Like and subscribe down below, and we'll catch you on the next one.